Nvidia has shattered a monumental barrier. The chipmaker became the first company in history to achieve a market value of $5 trillion. This unprecedented milestone was reached on Wednesday, October 29, 2025, marking a stunning new chapter in the artificial intelligence boom. The surge in value was not an isolated event, but the culmination of visionary bets on AI and relentless market demand. It represents a level of corporate valuation once thought to be purely theoretical, cementing Nvidia's position at the absolute pinnacle of global business and technology. The news sent ripples across financial markets, which were already buoyant from a recent and significant policy shift from the U.S. central bank. The immediate catalyst. Nvidia's final push past the $5 trillion mark came from an influential source, the U.S. Federal Reserve. On Wednesday, the central bank announced its second interest rate cut of 2025, a move designed to stimulate a somewhat sluggish economy, bolster the labor market. The Federal Open Market Committee, in a decisive 10-2 vote, lowered its benchmark federal funds rate to a target range of 3.75% to 4.0%. This decision signaled to the markets that the Fed was willing to provide support for economic growth, even with some lingering concerns about inflation. The move was widely anticipated, but its confirmation sent a jolt of optimism through the financial world. Lowering interest rates is one of the most powerful tools the Federal Reserve has to influence the economy. The technology sector is uniquely sensitive to changes in interest rates, and the Fed's decision to lower borrowing costs acted like a potent catalyst. Tech companies, particularly high-growth ones, are capital-intensive. They continuously invest vast sums into research and development to maintain competitive edge and create the next generation of products. When interest rates fall, financing costs for these projects drop significantly. Companies like Nvidia can borrow more cheaply to fund the design of new chips, expand manufacturing capacity, explore new frontiers in artificial intelligence without high interest payments. Lower interest rates change the calculus for investors. When government bond yields are low, those returns look less appealing. Nvidia's meteoric rise is inextricably linked to its central role in the artificial intelligence boom. The company designs and manufactures graphics processing units, or GPUs. While these chips were originally created to render realistic graphics for video games, their underlying architecture makes them exceptionally good at performing the massive number of parallel calculations required for training and running complex AI models. This has made Nvidia's chips the gold standard for AI development, transforming them from a niche gaming component into the essential hardware powering a global technological shift. Every major advance in AI, from large language models to drug discovery, the journey from $4 trillion to $5 trillion in market capitalization was remarkably swift, taking just over 3 months. This rapid acceleration highlights the intense momentum behind Nvidia's stock. On October 29, 2025, the day of the historic milestone, the company's shares surged at the market open to officially cross the threshold. This wasn't a slow and steady climb. It was a powerful rally fueled by a potent mix of strong earnings, optimistic future guidance, the favorable macroeconomic environment created by the Federal Reserve's rate cut. The numbers tell a story of exponential growth and overwhelming investor confidence in the company's trajectory. While Nvidia is the first to reach the $5 trillion peak, the summit of the financial world is growing increasingly crowded with tech behemoths. Mountain Peak with 3 flags labeled Apple, Microsoft, Nvidia highest. Microsoft, a software giant, reinvented as a cloud and AI powerhouse, crossed the $4 trillion mark in July 2025. Strategic partnership with OpenAI. OpenAI, creator of ChatGPT. Microsoft deeply integrated AI across its product suite. Azure Cloud Platform. Office and productivity software. Finalized pact giving it a 27% stake in OpenAI. That stake valued at roughly $135 billion. At the center of Nvidia's universe is its co-founder and CEO, Jensen Huang. Known for his signature leather jacket and his visionary, often bold pronouncements, Huang has become one of the most influential figures in the technology industry. His leadership has been defined by long-term strategic bets that have paid off spectacularly, most notably his decision to pivot the company's focus toward AI years before it became a global obsession. His public statements, especially during earnings calls and industry conferences, are scrutinized by investors for any clues about future demand new products, his assessment of the competitive landscape. Huang has dismissed concerns about an AI bubble. The dizzying heights of a $5 trillion valuation inevitably come with significant risks. The most prominent of these is valuation risk. Nvidia's current stock price is not just a reflection of its present-day earnings, it is priced for near-perfect execution and enormous future growth. This leaves very little room for error. If the company's growth were to slow, even slightly, or if its profit margins were to shrink due to rising costs or pricing pressure, it could trigger a sharp and painful correction in the stock price. Investors are betting that the AI boom will continue unabated for years to come, and any evidence to the contrary could lead to a rapid reassessment of its value. As Nvidia charts its course in this new territory, investors in the US, investors in the UK, investors in Canada must remain vigilant and focused on a few key indicators. While the AI story is global, keep a close eye on specific circumstances. US dollar, British pound, Canadian dollar, which can impact overall returns. The path forward requires careful navigation. The exuberance of today could give way to the caution of tomorrow. Monitor the data, not just the headlines. First watch point: Nvidia's sales pipeline. Orders for data center chips. Scrutinize quarterly earnings beyond headline revenue and profit. Watch forward-looking guidance from management.